Before we dive in, this video is for educational purposes only. I'm a peer sharing insights, not your financial advisor. Always consult a professional before making major investment decisions.
So you're a dual US-Filipino citizen, and moving to Manila sounds like an absolute dream, right? I mean, we're talking gorgeous weather, amazing beaches, and a much lower cost of living. But wait, setting up your borderless financial life? Yeah, that can actually turn into a huge maze of hidden fees, tax traps, and just totally confusing cross-border rules. But don't worry, today we're going to completely demystify opening accounts, dodging those nasty fees, and navigating taxes in Manila. Welcome to The Explainer. We've broken this explainer down into 5 survival pillars, so your finances stay totally stress-free. We're looking at daily banking and transfers, Social Security direct deposits, the FBAR and FATCA traps, navigating U.S. expat taxes, and wrapping up with Philippine taxes and withholding. Let's get right into it.
All right, Section 1, Daily Banking and Transfers.
Let's start with the most immediate hurdle you're going to face the second you land. How do you actually access your money every day without losing a chunk of it to bank fees? Seriously, avoiding exorbitant ATM and foreign transaction fees is a massive deal for expats. Because when you're bouncing between countries, pulling cash out of a local ATM with a standard US card can literally cost you a fortune in hidden currency exchange markups and flat withdrawal fees. It just slowly drains your savings.
Well, the experienced expats in our sources have a pretty brilliant workaround. One notes that they use Schwab because it refunds all foreign transaction fees. Using a US credit or debit card from a brokerage like Charles Schwab or Fidelity is honestly a game changer. They refund ATM fees worldwide and charge 0 foreign transaction fees. But the golden rule here is redundancy, right? You absolutely always want more than one way to access your cash, just in case the card gets frozen or you run into a glitch.
And that perfectly tees up the ideal everyday banking strategy in Manila. Step 1. Keep the big money, the bulk of your assets, safe in your US accounts. Step 2. Transfer over just your living expenses using a low-fee service like Wise, which gives you the real mid-market exchange rate for Philippine pesos. And Step 3. Drop those pesos right into a local Manila checking account for your daily spending. Boom! You only bring over what you need exactly when you need it.
Moving right along to Section 2, Social Security direct deposits.
Now, if you're retiring in the Philippines, you're probably wondering how to get your U.S. government benefits across the ocean seamlessly. And good news, retiring abroad doesn't stop your U.S. Social Security. The SSA can pay benefits to most foreign countries. But to set up direct deposit to a Philippine bank, you'll need the specific direct deposit sign-up form for the Philippines. And the very first thing you need to nail down is your exact Social Security claim number. This is the crucial link the Federal Benefits Unit uses to connect your U.S. benefits to your local Manila account.
Now, right next to that claim number, you'll see a box for the BIC. Government forms can be super intimidating, and it's so easy to panic over a blank box. But look closely. It explicitly says optional. It's only for very specific payment allotments, so honestly, just leave it blank if it doesn't apply to you. Don't let it trip you up or delay your application.
Okay, to guarantee your money actually shows up, you've got to play by these 3 strict rules. First, your local receiving account has to be in Philippine pesos, not US dollars. Second, you absolutely must provide the bank's full SWIFT or BIC code on the form. And third, your U.S. Social Security payment gets automatically converted to pesos at the daily international exchange rate right before it's deposited. It's hands down the safest, fastest way to get your money abroad.
All right, watch your step here. Section 3, the FBAR and FATCA traps.
So, we really need to talk about the hidden trapdoors that catch so many expats off guard and lead to some pretty massive headaches and fines. The magic number you need to burn into your brain is $10,000. To fight overseas tax evasion, the U.S. has some really strict reporting rules. If the combined aggregate total of all your foreign financial accounts hits $10,000 at literally any single point in the calendar year, you have to file a foreign bank account report, or FBAR. Notice I said aggregate. So if you have 3 local accounts in Manila and they each have $4,000, well, that's $12,000 total, and you've just crossed the threshold. And heads up, the IRS casts a super wide net here. It is definitely not just your local checking and savings accounts counting toward that limit. It includes foreign investment and brokerage accounts, foreign pension accounts, and even foreign life insurance policies that have a cash value. It's like a giant puzzle. Forget to file this, and you could be looking at upward of $10,000 in non-willful penalties every single year. Oh, and if your foreign assets top $200,000, you might also have to file FATCA using Form 8938. So definitely keep an eye on those balances.
Okay, let's look at the bigger picture. Section 4, Navigating U.S. expat taxes.
Let's see how all of this builds into your actual U.S. tax obligations while living in Manila. Because, unfortunately, moving to an island paradise does not mean you escape the IRS. Here's why your situation is uniquely tricky. The U.S. system is citizenship-based, meaning they tax your worldwide income no matter where on Earth you live. The Philippines, on the other hand, taxes resident aliens only on local Philippine-sourced income. But, and this is a big but, if you are a dual resident citizen, the Philippines taxes your net income from everywhere, inside and outside the country. So basically, your global income is theoretically caught in the nets of two different countries. Now, if you're starting to sweat about getting taxed twice, take a breath. There are some incredibly powerful tools you can use to avoid paying taxes twice on the exact same dollar. First, you have the Foreign Earned Income Exclusion, or FEIE, which lets you exclude a huge chunk of your foreign earned income. We're talking up to $130,000 for 2025. Then there's the Foreign Tax Credit, which gives you a dollar-for-dollar credit on foreign taxes you've already paid. And finally, you've got the US-Philippines Tax Treaty, which is a lifesaver for mitigating double taxation on things like dividends, interest, and royalties.
And that brings us to our final pillar, Section 5, Philippine Taxes and Withholding.
So, we have to map out exactly what the Philippine government is going to ask for from your local earnings. If you have income subject to Philippine tax, you need to know their progressive individual income tax rates, which are updated for 2023 through 2026. Good news first. Your first 250,000 pesos are taxed at a beautiful 0%. But from there, it scales up. 250K to 400K hits 15%, and it steadily climbs up to a top rate of 35% for income over 8 million pesos. Keep in mind, this applies mainly to compensation and business income.
But here's a rather harsh reality about your savings that you absolutely need to know. The Philippines imposes what's called a final withholding tax on passive income. Basically, any interest your money earns while just sitting in a standard Philippine bank account gets hit with an inescapable 20% tax, right off the top. The bank deducts it automatically at the source. And you know what? That is exactly why the strategy we talked about back in Section 1, keeping the bulk of your cash in the US and only transferring your daily living expenses via Wise, makes so much financial sense.
So now that you're armed with the playbook, using Charles Schwab or Fidelity to dodge those ATM fees, transferring smartly with Wise, and steering clear of those nasty tax and FBAR traps, you're ready to go. You are fully equipped. The only question left is, how are you going to use this strategy to build your ultimate stress-free borderless life in Manila? Thanks for joining us for this explainer, and we'll see you next time.
Hit subscribe for more wealth-building tips.